Welcome into today's video. I'm going to be talking about Runway and how to know if a business has the potential to continue compounding and growing its business for a long foreseeable future, whether that's 5, 10, 20 years. Now, obviously, you're not going to be able to determine exactly how far that runway will last, but there are a few factors I look at to help me determine, is it there, is it not, basically. So the few things that I do look at is is the business currently growing, and what rate is it growing at, and a crucial sort of element to this, is this profitable growth? Can they sustain this growth profitably and continue to do that? Do they get paid to grow? That's very important, particularly if you have any sort of branded product. Can they continue sort of advertising profitably and continue that expansion where it feeds itself in order to compound? The second thing is is it like a blue ocean? Is this market sort of a growing market itself? Has it got a lot of untapped potential where there's a lot of fat sort of in the industry? There's a lot of opportunity, or is this something where consumers fight nail and tooth for in terms of price, and most of these competitors actually run at break even or like a charity almost, and have very razor thin margins and often have sort of very cyclical periods. So this might be a good example to look at. If you look at the company in the name of ELF, ticker symbol ELF, that sort of goes through that example where they've got a brand where they're selling their makeup cosmetic products and they're actually profitably growing their business, where they spend money on advertising and collaborations as well, but that growth is paid for by their advertising and it's profitable because of the products they sell, and they've got good margin there. So that's a couple of things I want to look at. Sort of, is there a lollapalooza of factors? And what I mean by that will help them grow. And what I mean is that are there multiple things that stack up that help them grow right? Are there multiple levers that they can pull on? So what I mean is, for example, let's just go back to the original example of this elf company. They have their international expansion. For those of you who aren't familiar with the cosmetics space, a majority of the mature players in this market often comprise 70% of their sales internationally, versus only 30% in the US, whereas Elf actually has the opposite dynamic at the minute. 15% of their sales are international, 80% are in the US. And it's been proven that they've successfully scaled internationally as well, so that should be an issue. So that, again, that's a lever for them to pull on. They're able to sort of continue, if they're able to sort of assume and continue that growth, that's one thing they've got. Additionally, their products are much lower priced than their competitors. Their margins as a result are a bit lower than some of their competitors. So they've easily got room to sort of expand their margins with time. I think they were, last I checked, 8% net income margins. They could easily, with the quality of the brand, conservatively go to about 12% net income margins. Again, that's another 50% lever to pull on. The market in general, their market share, in general, is growing. If you look at sort of their mind share statistics that they sort of other third party researchers produce, you can clearly see that their mind share for the 14 to 36 years old category, I'm talking about Gen Alpha, Gen Z, and millennials off the top of my head, they are number one ranked in terms of mind share, meaning that their brand is sort of most recognizable for that category. And to me, that signals that their current market share isn't sort of priced into that. So again, that's another lever to pull. As those consumers get older, they have more pricing power. That's going to benefit them greatly. There are other sort of tailwinds and levers that you want to look for. So this might be the fact that if they're selling them in the stores, they may not have rolled out sufficient sort of logistics, in terms of they might not be in every single store. I believe this is the case for Elf as well, actually, but and even if they are in every store, they might not have all their products or all the relevant shelf space that they would ideally want, in comparison to, for example, a more mature player who whose sell-through rate might be just as good as Elf's, if not Elf's might even be better in terms of their product sell-through. So you just have to sort of think about, are there any levers to pull for this product long term? Is the market expanding? Sort of what's the total but addressable market? Are there international markets they can go into? Now, you have to caveat the international markets with, have they actually proven they can scale internationally? Are there other sort of competitors that do this? Because not all products and not all services travel well. Some services, for example, might only do really well regionally, whereas the likes of, Coca-Cola is a traditional example, travels really well internationally. See's Candy is more of a regional thing. So again, it's just sort of knowing the nuance there. But generally what I like to look for is sort of, are there levers that I can pull, and sort of see, is there growth coming from multiple sort of opportunities there in terms of growing the market share, net income, and so forth. Factors that can sort of help that expansion. Is it perhaps a business model where I can see them indefinitely sort of expanding continuously without anything interrupting that realistically over the next 5-10 years without any real issues? Is it sort of like a blue ocean sort of, I believe it's a strategy where there's a lot of room of opportunity there. So that's something I look for when I'm looking for compounders. Traditionally, I don't really necessarily think that the current growth can be projected into the future. I believe I read a study somewhere where like 75% of companies where they're growing like 50% or more, their growth declines rapidly. Growth rate declines rapidly after sort of like 3 to 5 years. I don't, even if that isn't sort of exactly word for word what that says, that's sort of been my personal experience as well. I've seen that happen. But you want to really understand the sort of the market and the position this company has. Do they have any levers, or in fact, are there things obstructing them from sort of expanding? Are there perhaps nuances where permitting might actually prove that their growth will be a lot slower than anticipated? Is the market just in a really sort of favourable environment at the moment, and that's why their growth has peaked, for example? Or it could be the opposite, like coming back to Elf again. I know you're all going to say, well, why do you keep referencing this company? It's just one that's top of mind for me, as I've been doing a good amount of research into it. And one of the things I actually noticed is, yes, that the management have forecasted their revenue growth to drop off significantly this year. However, if you've actually looked around and listened to all their competitors' earnings calls, likes of L'Oreal as an example, just off the top of my head, you'll actually notice that a lot of these companies, their growth has been break even. Perhaps they've squeezed out a percentage or two, but a lot of them have actually had negative decline of 3-4% revenue decrease essentially. And the fact that Elf is still managing to sort of take market share and grow revenues in this environment, albeit significantly less, shows to me that with these additional levers they have, that once the market sort of normalizes into a normal period, and even if it doesn't, it'll still continue to do well. But I can see opportunity for growth to re-accelerate, and that's where some opportunity may come from as an investor, where earnings are the company's priced perhaps too conservatively. So I think what I'm trying to get at here is, you want to look at what levers there are and just make sure that you understand, are they sustainable? Look at sort of more mature companies to gain a better understanding of that as well. Thanks for listening. Hope you found value in this. If you've got any questions as well, just let me know in the comments. Thanks.